Throw a good morning in this chat. It's all about the GM. All about the GM. Oh, feel good. Feels good dishing out the GMs. Now let's go good morning up to Discord. Hey. Here we are. Good morning, good morning, good morning. Got a ruckus crowd in here today. Uh-oh. Ruckus crowd. They're going to want some signals. What's Bitcoin going to do? Is the Chinese wave coming? Could be. Could be indeed. It is June 1st. Chinese citizens are allowed to buy cryptocurrency. It's going to be a mad run on Bitcoin, NFTs, and ordinals. They love all three. Solana, the TV over in China, I guess, was flashing Solana ads and stuff. Pretty crazy. But the Chinese wave might be coming to crypto. They are legally allowed to buy without getting put in any detention camps and beaten with rice noodles or whatever the hell they do to torture their people. I love the China. I mean, literally love the Chinese people. They are awesome. The government, oof. Got issues with commies. Just saying. It's all good though. Yeah, one of my uncles lived in Shanghai for over 10 years teaching English at one of the unis. They had him set up in a mansion. He had like 12 servants. Just one dude. Pretty wild. And had like 2 people flanking him at all times. Spying on him and stuff. Making sure he wasn't trying to teach any American propaganda. Just wanted the American language taught. But yeah, he loved it. He fell in love with the Chinese people. Fell in love with him. Uncle Scott. I was named after him. Let's see. What are we doing here? 9:02 a.m. Eastern Standard Time. So, Bitcoin. Got the new monthly range. Beautiful. Right at the end of the day, tried to push up to get inside of it. Wasn't happening. Wasn't happening. Actually, rejected right here. Right? Rejected off the top side of the daily range. Got a wick right to it. Came down to where? First came down to the bottom of the weekly range. Checked up a bit. Rejected from the 4-hour 68.3 Laplace, the bottom side of that distribution range. Dumped out. 2 wicks through the first standard deviation on the daily. Both pulled up, closed above it. Beautiful thing. That's why algos love the distribution. What are we about to approach now? Bottom side of the 68.3 again. Let's see what happens when the data set gets there. Let me take a quick peek here. Run through crypto real quick. Make sure we got no outliers. Screwy old bonk. Hex. Nice hex. A little recovery, huh? Okay. All right. So yeah. And when traditional markets open here real shortly, I'll tell you what, let's see where Solana's new monthly range is. Woof! Nice tight one too, man. Nice tight one too. You can see Solana too. Where'd it reject from? Top side of the 68.3 Laplace on the daily. Came down, found support right here. 4-hour, bottom side of the 68.3 Laplace. Then, during that 4-hour candle, Solana moved down to the 95.4% Laplace distribution range. You get a good kick off that? Sure did. Right back up. Started finding support on the bottom side of that 68.3 again. Popped right back up to the daily range. Getting a wick into the monthly right now. You want to see these data sets start closing some 15-minute candles above these monthly ranges, right? We don't want a rejection here. Let me see something real quick. Where's that? Scale down, baby. Scale down. There it is right there. So yeah, that's actually top of the weekly. You got a tight monthly, got weeklies below it. We got a really tight daily. Real tight daily right below the monthly range. This isn't one of the more bullish setups I've seen, but any data set can thrive. You got to get up above the monthly, though. Got to get up there. No doubt about it. Good stuff. You know what? I don't look at it much. Let's take a peek at ETH. Why people are still holding on to Ethereum blows my mind. Tight range too. Very tight range. You can see ETH did the same thing. Rejected off the top side of the daily 68.3 Laplace. Right down. Look at the red dotted line. Let's see. Yeah, is that the... Give me 1 second here. Interesting. What is happening with this? Where, oh where? Is my little dog gone? Oh, this is interesting. Let's find this weekly. What are they piled right on top of each other? Yeah, that's what's going on. You got a tight weekly. Wow, no, wait a minute. Was that the bottom? Yeah, you got a weekly. There we go. Was that it up here? This is interesting, man. This is a real tight range. Real tight. Let me see. Where in the Lord's name is this weekly range at? Oh, there we go. That's why I can't see it. It's right at the center right here. Here's the center of the weekly. Boom, boom, boom. Yep. And yeah, I think you've got top side of the weekly right underneath, top side of the 68.3 Laplace, center of the weekly, bottom of the weekly. That's what was confusing me. Didn't see that bad boy right there. Sometimes you really got to search. Because as I pulled this up, you can see the green dotted line right down here. Support level for the weekly. That's what had me a little cross-eyed. Not going to lie. Here goes ETH running back up to the monthly range. We'll have to see what happens. And like I said, I don't look at ETH much. Something was telling me to look. It's got a tight monthly, just like SOL. Look at SOL's tight monthly range. Approaching it as we speak. Bottom side of it anyway. There we go. And then we go to Bitcoin. Bitcoin. Looks like the alts are getting a little more traction early on here this morning. Yeah, a little bit bigger of a range on Bitcoin. But you can see, made a run to test it. Hasn't tested it yet. All right, I want to see this baby up here. Now, when we're talking about a monthly range, percentage-wise, definitely close enough. It actually did send a candle up into that area. I want to see a full test. I want to see what happens when the data set gets up in this monthly. Because if we're going to get a run here, gotta close daily. Gotta close a daily, actually, above this monthly. Let's see what happens, man. Could be interesting. Could be interesting. What does June have to hold? June 1st. Chinese wave has been released, like I just said earlier. I got a fly in here that's as big as a horse, man. Please don't bite me. It is big-ass horse fly. Jesus, man, things like this big. It's like a little Apache helicopter. Yeah, man, for sure. Yeah, you want gold? Let's see gold. So we did get a new monthly range on gold. Let's see here. Dun, 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 dun. Ask and you shall receive, sir. Oh, nice. What do we got going on, gold? 1970, huh? Let's see. Wow, where is gold's monthly range at? There it is up top. Let's see. Let me scale this down. Wow, big monthly range. So here we go, gold going up test this monthly. Bottom side's at about 1977. I'm going to show one thing real quick here. Let's flip this on gold. Yeah, baby. There you are. And we are going to go up to, you know what? Yeah, I'm going to start on the weekly, which for gold for me, 5-day. I don't go up to a 7-day on gold. So I've been talking about this cross on gold getting ready to happen, right? We've got about 1 day, 8 hours. So yeah, 32 hours left in this 5-day candle. The white dotted line's a reverse wave trend. Red dotted line, reverse Fisher. These are magnets for price action. I'm surprised we haven't seen this dip down to around 19, a little under 19. That's what I've been calling for. You get outside the power mean band, you come back and you test the reverse wave trend, right? The returns mean revert. The data sets follow. Price action follows returns. That's what we do here at Alpha Trading. This is what the high frequency trading firms know. This is what we created to follow them. That's all we're doing. That's all we're doing. You will never be able to trade like these high frequency trading firms. In the time I've been talking right now, dude, tens of thousands of trades, hundreds of thousands probably. How long we been open? 10 minutes? Guys, they're pumping them out, man, nonstop. All we're doing is recognizing what the returns are doing. Yes, yes, yes. I'm still looking for this area, but I'll tell you what. Go down here. You know what? Let's look at it on 2-day. See if a wave trend got tested on 2-day. Because I did the same thing here with and it did. I did the same thing with Bitcoin, right? I was looking down at some higher time frame, reverse wave trends after being out to the top side of the power mean band, 25.5 area. Well, hey, it kicked up off lower time frames, 2-day, right? Daily. So let's see here. Gold on the 2-day definitely tested the wave trend. You see it right there, folks. Bam, perfect. Got a couple wicks right into it. Is it going to climb to the top side of the power mean band? Hey, man, it can. It can. Got back up above the 33 log MA. Everything we use here, you're not going to see any exponential, right? Any simple moving averages. Log return moving averages is what we use. I have 3 set up, a 9, a 33, and a 99. Powerful, powerful, powerful. If you don't know, I use a specific number philosophy in everything I do. Trading especially. It works out real well. You can't get away from the 9. Shock yourself. Multiply 9 with any number. Break that number down, right? What I mean, 9 times 9 is 81. 8 plus 1 is 9, right? 9 times 7, 63. 6 plus 3 is 9. Do it with any multiple number. I don't care if you're multiplying 9 times 1,463. Do it on the calculator. Then break that number down into a single number. It's always going to come back to a 9. When you realize the power of numbers, you will change your philosophy up. It works very well. So gold did test this wave trend, man. Let me see what this is at the daily. It's having a nice little pump. But here's the other flip of the coin. Right on the daily, the gold data set came down, tested the reverse Fisher and 99 log MA cross. Right? Where is it rejecting from right now? You're going to have to close the daily candle above. Put it this way. You close a daily candle above this reverse wave trend. You've got the 33 log MA up here at about 1983. But here's the 33. 33 power mean is the blue dotted line. Within, these are all power means. That's what this band is. That's why it's so powerful. These log MAs, that's why they're so powerful, right? So gold could make a run up here, back up above 2013. I really, really wanted. I'm not a big supporter of gold. Everybody knows my reasons why. No supply cap. We're in a digital age. Is it a store of value anymore? It hasn't been a store of value since. You think the U.S. is actually holding a lot of gold? Investigate. It's not, man. It's not. China got all the gold, baby. China's got a lot of gold. Another reason why I don't want to mess with it. But yeah, we're up here. 2013, 2015 area again. Wouldn't shock me at all if gold bounces out of here, man. Let's see. Let's go down to 4 hour and see where we're at. Could be back up top of the power mean band, to be honest. Maybe outside of it. This 4 hour little pump. Let's see here, man. Let's let it populate. Yeah, you're back outside the power mean band. Kind of a no man's land. Kind of a no man's land. I'll tell you what. This daily rejects here. Gold's going to be right back down here at the reverse Fisher. 1940 again. Somewhere in that area. So let's see if we're setting up any hidden divs. Yes, we are right now. You get a rejection here on the reverse wave trend, right? This daily, you get a top here. It's going to be a lower high. Look at the returns oscillator. That's right. This isn't your RSI. All right. This is a returns oscillator. This is the only oscillator you should be looking at for divergence. Because what is the real divergence in these markets? It's not between price action and price, the strength of price and price. It's between returns and price action. That's where the real divergence is. A lot of people don't know that. Hey, that's fine. Advantage alpha trading. Advantage high frequency trading firms, right? So right now it's setting up also on what? Low length Z-score. Rejecting off the 95% confidence interval. It looks like to the buck. Close. Almost got up to it. Okay, let's go back down here. Yeah, if it rejects here, guys, you can get a rocket. Maybe we do go down and test that. We're going to have to let this play out. Today, this is pretty important. You create a high here on the daily, this thing's going to pull back. Let's see here. What have we got volatility wise? Everything's contracting, negatively correlated. That's good for the walk up right up into the wave trend. No doubt about it. You know what? Let's go over to the RMLR real quick. Let me turn off the 30 length. Let's leave the low length on. Let's flip this baby on gold. Time is at 9:15. Got to get to these traditional markets, get all these new monthly ranges, especially on what? SPY. We love our SPY intraday options, don't we, boys? Would you take a buy on gold up onto? I would definitely be letting today play out. See what happens with that daily reverse wave trend. And let me see here on the RMR. So here is the daily too. Where you at? 2SD band. You're up here at the second standard deviation band too. Let me scale this down a little bit. There we go. You can see yesterday gold ran up, tapped the first standard deviation normal distribution. That's what that little blue dot is. But you're rejecting off the 2SD level. Remember, these standard deviation bands give you a little insight. How far away the data set is from the RMLR. You get 2 standard deviations, that's a 95.4% probability these candles will not close above that area. Right? That's why you keep seeing these wicks pull down in. The more apt to happen, come back down, test the RMLR. That's down here at 1925. Let me see here. Let's put on the 30 length. Get rid of the 7. See what's going on here. But see, now you're on the bottom side. You're underneath the 30 power mean. 2025 for the 30 length. I'm telling you right now, depending on what happens on the daily with that wave trend, if that thing rejects, you're probably going to be down here. There you go. 2SD band on the 30 length RMLR is a little bit under 1900. So this is like the moment of truth. Really is. Now let me go over here. So you're saying take a buy up gold up until 1977. I'll tell you what where that is exactly. That's right at the bottom of the monthly range. I mean, right at it. 1977.31. Here's what I would be doing, right? I do not give financial advice, but I'll tell you what I would do. I would be waiting. I would be waiting because this is tough, man. This is real tough, especially the way this is set up. When you have a monthly range above a weekly, you got a daily crammed in here between the monthly and the weekly. You need gold above this monthly range. I would not be interested in getting any gold until it breaks 2000 and shows some good support there, man. That's what I would be doing. There's too much overhead volatility resistance up here. But then you've got the weekly down here supporting. Gold could get trapped in here for a while. Not going to lie. Gold could get trapped in between maybe the middle of the monthly, 1990. I'm talking this week, in the middle of the weekly, 1956. All right, I've got about a 34 point range or something like that. Yeah, I wouldn't be buying. I wouldn't be buying right now. That's for sure. But so why? That's what I'm saying. And what kind of gold? Are you talking about buying paper gold or the real underlying? Because when I used to trade metals, it was easier for me. For a couple of years, I lived in Carson City, Nevada, but I was always up in Lake Tahoe. Carson City was always close. Gold and silver shops everywhere if you've ever been out there. Safes full of it, right? So when you go around gold and silver shops in the Midwest and stuff, kind of hard sometimes to find, especially if you're buying bulk. I'd go in, I was trading a lot of silver. I'd buy 5 cases of silver at a time. Last time I did that, I bought at 12, sold at 18. Haven't done it since, but moved away from Carson City. I'm not going to buy paper or anything. It's ridiculous. So if you're talking about buying underlying, and if you're buying for future, I'd throw the data set away, man. If you're buying gold as an investment, doesn't even matter at this point. If you're buying gold to trade, I'd wait. I'd definitely wait. Because you get a rejection off this monthly range. Could be ugly. We could see that 5-day reverse wave trend get tested. And that's below 1900. Now, do I think that would be a good buy? Tell you what, if gold hit 19, it'd be a great buy, probably. Probably would be a great buy right down in there. So yeah, hopefully that helped you out a little bit. But when it comes to a store value in the digital age, I'm putting all my eggs in the Bitcoin basket, man. Putting all my eggs in the Bitcoin basket. There's a lot of traders out there. Maybe you don't even know anything about crypto or anything. If you need any questions answered at all, you can come into the Alpha Trading Discord. A lot of people, they're kind of like, should I go join? Trust me, you come in, you're not going to get hammered. Hey, you need to buy this. Hey, we're not looking to extract money from our community. We're actually looking to give free information, education. We don't charge for education, right? The Discord is a little overwhelming, though. I'm going to go out on a limb and tell you that right off the bat. There's so much information packed in there. It'd probably take you years to go through everything. There's a lot in there. But we're a great group of people, man. Not just tooting our own horns. Everybody gets along. The one thing that separates us from everybody else, you go into a trading Discord, Twitter groups, right, with trading or something. Everybody's using something different. Nobody's ever coming together on one thing or another, right? Usually there's a lot of battles that spark up, a lot of arguments. No, this is the way. No, that's the way. I got a news flash for everybody out there using traditional TA. It's not the way. You can use it if you want. If you figured out a strategy to make some money, I guarantee you, part of that strategy is you take your profit quick. You don't swing trade volatility, right? You have found a way to scalp, right? You have found a way to scalp the low time volatility in any of these markets. It didn't used to be like this. Hell, there's volatility in Forex now. The problem is people jump into this. They start using a lot of leverage. Leverage is poison. Be careful. It's especially if you just take your time, like with everything in life, take your time, take a small account, build it up with no leverage over time. Who knows, maybe in a year, if you're trading crypto, you've got that account up to 1 Bitcoin. Then you got some power. Then you got some buying power, right? Then you can trade with your bias. And that's what we do here. Everything we do at the beginning of the day, time is at 9:21. I use a workflow, macro all the way down to about a 15-minute. 9 minutes, 6 minute, 3 minute, I'm evaluating where to get in if I'm trading on the 1 minute or the 3 minute time frames. The workflow I do is going to give me bias for the intraday trading. If I'm scalping with my bias, risk on, full risk, the full buying power of my account. If I have 1 Bitcoin in there, right, I'm going to trade with that 1 Bitcoin. So if I'm counter trading my bias, I pull risk off. I might only trade 0.1 Bitcoin, right? I'll take 90% off. It's a great way when you're counter trading your bias to limit your risk too. It's all about risk, right? That should be a big part of your edge, understanding risk. Understanding when to put it on, when to pull it off. I know people trade the same amount every time, doesn't matter what they're doing. Their P&L's wrecked. You have to take risk off and you have to limit your losses. Nobody's perfect. When it comes to volatility trading, the correlation breaks, all this is correlation. This correlates these volatility reads to price action. You hear people all the time say volatility is not directional. It is 100% directional if you correlate it to price action. So this is what people don't realize, which is fine. Once again, advantage high frequency trading firms, advantage alpha trading. So it's these little correlation breaks. And when you're scalping low time frames, look at this on the 1 minute. You want to see some noise. This is what you got to take your profit fast. Volatility expands, volatility contracts. That's all it does. Nothing special about it. This is where all the magic happens, right? The columns are the low length volatility read. The blue gradient line that changes pink to purple, that is the 981 volatility read. The green to the red, that's the 2400 volatility read. This is the correlation for the 525, correlation for the 981, correlation for the 2400. When you learn how to read this volatility indicator, game on, man. It's very, very, very powerful. Very powerful indeed. Helps you take profits, right? When you get volatility expansion to 100% and volatility grade, the red and white line here, which alpha trading volatility grade is a combination of implied volatility and historical volatility. You put that on top of volatility percentile, you have magic happening. A lot of people don't see it. We do. It's very powerful, man. Very powerful indeed. Okay, let's see here. And it doesn't matter what time frame. You're outside the power mean band, whoop, wave trend, right? Even dipped down, found support on the 99 log MA. I mean, what we've put together with this ultimate power mean indicator, great, fantastic. So let's see here. Hopefully that helped out with gold, man. But we talk about gold every day, so come back. Come back, my friend. Let's see here. Yep, let's get over here. Let me check out, see what SPY's doing pre-market. Where are you, baby? Yeah, I was going to say up. No brainer up. Let's see. Let's get up here on the daily. VRE. Oh, yeah, and by the way, remember where I said the center of Bitcoin's monthly range was going to be, right? Let me flip on Bitcoin real quick. We got a couple minutes. I was off by just a little bit. Just a little bit. Pull this down. Remember, I said 27.5. Let's see where this baby's at. Where'd it populate at? I think 27.639. For a monthly range, not bad. Monthly ranges aren't the easiest. I was about $140 off. So I'll take that as a W. Take that as a W. Now let's flip this on to SPY. Because I did. Here, we'll give a quick little read here. First, let me get over here. Let's put SPY on. Now I want a 4-hour. I want to turn the UPM off. What are you doing here? I'm going to show you. There we go. Let me put, wow, man, a lot of volatility. Jeez Louise. A lot of volatility, ladies and gentlemen. Whoop, whoop, whoop. Let's get on the right candle here. Oh, it's testy. There we go. There's the beginning of May. So I'm working with this part of the data set right here. What am I trying to do? Find the new monthly range. New volatility range. The new price action volatility range. Boy, this is a mixed bag too. You got volatility all over the place, downside, upside. This is a toughie. So what am I left with now? When you start to learn how to predict these new ranges coming in, yeah, man, you'll see it. You'll see it. I'm left with wicks here. Try to figure this thing out. This is something you can't teach. Everybody's going to look at this data set differently. I'm seeing it though. I'm probably thinking center probably right in between 416, 417 is what it's looking like. 416, which would be good. Which at pre-market, bulls are making sure that this data set is going to open the new monthly above the center at least. Are we going to get a tight monthly range? Probably maybe right around 1%, I would imagine. We'll see. We'll see. We're about to find out in 3 minutes. That's what's great. So center in between like 416, 417, probably about a 1% range. Let's see. Let's see here in a couple minutes. Yeah, I like that. I do like that. Let's get rid of that. And you will get good at it too. You will get good at it, making these reads. And so then immediately I'm going to go over here. I'm going to put SPY on the RMLR. Let's see where this baby's at. Okay, so on the 30 length. Lovely. What is this, a daily? Where's this 33 power mean? A little low for my taste. But 413.64. Hey, man, that could be the bottom of the monthly. We'll see here shortly. See this 4-hour. Same area, like 415. You look at this on the higher time frame, man. Oof. Boy, that's low. You know what, too? Let's put on, I want the lower length, not the 30 anyway. Come on. Get off there. Yeah, it looks like a lot of noise, doesn't it? As a volatility trader, that's what you want. You like the noise. 400, huh? Wow, man, that's really low. Drop down to a daily. Where's this 33? 415 there, man. So pre-market though, this thing's gapped above the RMLR. Had the intersection back here, right? Had a little spill out to the 1SD band. Pulling up slowly. I saw some people yesterday talking about news. People trading news. I'm just like, God, man, stop. Just like, I don't care what kind of news it is. These days, it's all manipulation. It's all to manipulate people. And when it comes to trading, manipulate you into bad positions. That's why you want to learn the VEPS. Get real-time information about these data sets and the returns. There we go. Let's see where this baby's at. Oh, boy. Wow. How good is that? No, it was a little lower than I thought. The center's about 414.74, but doesn't that make sense? Look where the daily 30 power means at. All right, 414. A little bit below it. Interesting. Let me see if that top side up there. Where are you, little cross thing? It's right at it right now. Wait a minute. No, sorry. Top side. I bet that's it. Yep, there. Top side was about 416. Okay. I just had the top, middle, little, but I was really close. So, SPY going to drop real quick after that? Probably, man. Probably. Come down and test the top of this monthly. This will tell a lot whether this bounces. Look, you've also got the new daily bottom side of the 68.3 Laplace. That's that little white cross right here. And as these candles populate, these ranges will start moving out. Like I tell everybody, put the chart on 1 minute if you can't see everything right away. You got the center of the weekly right above the top of the monthly. I'll tell you what, SPY is set up bullish, man. SPY is set up bullish. And the monthly range, excuse me. God, this coffee, man. Give me the hiccups. This monthly range moved up a little bit. And you've got the weekly, you got the center of the weekly above the center of the monthly and the dailies, right? And the dailies, which is this a tight daily range? Oh boy, man. 9 cents. 9-cent daily range. Let me put this on a minute. There we go. There we go. Look at this tight little range. See the little yellow line right there underneath that 1 minute candle? Look how tight that daily range is. Boy, this thing's going to fly around. Let me get this brokerage account up real quick, folks. Should already be up. I got sidetracked. Glad this thing isn't moving hard. Although this is going to come down and test this monthly. It's going to be a good thing. Let me see the expected move on the daily here on SPY. Initializing brokerage session. Thank you, ChatGPT. Let's see here. Boop. Boop. Where is that at? Let's see here. Where are you? Going to give you? There you are.
Hello, this is ChatGPT.
Well, hello, sexy robot. How are you? Woo! All right, let's see here. Oh, just scared the dogs. What are you going to do? Top side about 419 1/4. Bottom side 415 3/4. That's the expected move on SPY on the intraday. Remember though, volatility moves distribution levels, right? Moves distribution levels. See, right now, finding some support on the 4 hour, that skinny white line. Let's break this down real quick so people know. You're probably not going to remember the first time. The solid lines, right? The solid lines. This is a daily range. The center is yellow. The wings are red. And then you've got 4 support levels on the daily. They're green. 4 resistance levels. You can see them right here. 1, 2, 3, 4. Those are 4 resistance levels from the daily volatility range. 4 support levels to the downside. All right. Now, the dotted lines are the weekly, right? So you got the center of the weekly, the wings, red dot, red dot. Then you've got 3 support green dotted lines below, 3 red dotted lines of resistance to the top side, and then monthly, right? Center of the monthly, the wings, and then you've got 3 resistance levels to the top side, 3 support levels to the downside. Are these volatility ranges powerful and their supports and resistances? Dude, they're very powerful. And then you take 4 hour and daily distribution levels. The 4 hour distribution levels, normal distribution is blue. The skinny white line is a Laplace distribution. So the skinny blue lines are normal distribution. White lines are Laplace. The big blue and white cross lines, those are the daily normal in Laplace distribution levels. Okay, let's see here. You know what? We got the center of the monthly down here. We're right at the second support level on this daily volatility range. We already know this thing's going to come down and test the top of the monthly, and that's at the first support level. This thing could kick up from right there. Look at this. You got the first support level in the daily volatility range. You got the top side of the new monthly range and the bottom side of the daily 68.3 Laplace. What else we got here? Skinny blue line. That's the first standard deviation, normal distribution on this 4-hour candle. You got a lot piled up right here, right? Probably going to see a bounce there. Probably going to see a bounce. We're already in the weekly range. That doesn't need to be tested. Monthly does. You don't really have to test the meat of it, although these data sets love it. You can bounce right off the top side. Monthly range tested, free to flow. Let's go. And this is set up super bullish. If SPY wants to bounce off top of this monthly range with this tight daily, man, this thing, we could see 95.4 Laplace move today. That'd rock some shorts, wouldn't it? Bounce SPY up to about 423, 424 area. Let's go. I mean, guys, we're creeping up towards the all-time high again. I don't know if you looked at SPY's data set on a macro time frame. It's the little train that just couldn't say no, right? It's just chugging along, baby. Just chugging along. Let me see here. Center of the monthly. What are the 415 puts? 34 cents. This is tricky right here. If I were to do anything right now, what are the 416s? 58 cents. That could be a quick little double up, man. This volatility moves and this data set drops down there. Could get a quick little profit. This is what I'm looking for, though. I'm looking for some calls. I'm looking for some intraday calls. Not interested in the puts today. All right. If I was gonna, I would have done it on the open when I saw the new monthly. Right, I would have probably bought a 416, and right at the open, that 416 was probably, I don't know, 35 cents or something. So what's it up to now? 54? Yeah, 56. Gee, I'm looking for a full test here. All right, let me throw this back on a 15-minute. Now that we know where these ranges are at. Now that we know where the range is at. All right. I mean, and that was just a little bit of a gap up, right? Boom, boom. We got to look at the chart now, man. Got to look at the chart. We got a 4-hour here. What's that? 414. We got reverse wave trend down here, right outside the power mean band. You can see right back down to it. Almost got to the reverse Fisher. A lot of wicks in here, man. Jesus, there's a battle going on. A little trench warfare. Buyers and sellers. The only thing going on in the market. Don't let anybody else get into some big long blah, blah, blah. This is what the market's all about. Guys, there's only two things going on. You got buy pressure, you got sell pressure. Who wins the battle? One team lays down, right? They don't want to expend all their firepower. That's what starts to create the imbalance in buy and sell pressure. That's what creates the divergence between price action and returns. Is this something you can go read in a book? No, it's not. We have been working at this stuff for years now. Okay. These are all things that we have gleaned from using all this, man. Okay. Let's see here. Let's go up onto a daily. Bears are trying, aren't they? They're just, this thing could ride this power mean band in the reverse wave trend to the moon. I'm telling you. So on the daily, 410.47 is the wave trend. Ideally is what you want here. You want this data set to go sideways. Let the power mean catch up, right? Because mean reversion can happen right at the top of the power mean band right here, about 415.64. There's that 416 number again. Now 31 cents. So you go down here. So now I'm looking at the daily. 410 and a half, huh? Let me see here. Yeah, bottom side. Pretty much. That'd be a 95.4 Laplace move to the downside. Second standard deviation. Yep. No monthly or weekly supports. Just distribution levels. Beautiful. And what else is down here? Right about 412. It's the bottom of the daily range, right? So if SPY were to dump out today, not going to close under that area. I mean, it's maybe happened once or twice since I've been using this indicator. That's what makes these ranges so powerful when you get big volatile moves, just like the distribution. That's why we overlay the VRE with distribution levels, because it's all about probabilities. You get down to the bottom of this range or the top, look, they're both right at about 95 for Laplace, both sides. So the daily range supporting the entire daily range, including all the resistance and supports, are inside the 95 for Laplace distribution range. And we're centered right between them, right? I mean, we're literally, this is the 68.3 Laplace distribution range, top side, downside. We're literally right in the middle. Right in the middle. This thing could go either way. Either way. So is what you're looking for. Go down here. Yeah, there's the bear div for sure. I mean, you've got the returns oscillator below the zero mean. Look at the correlation it was building, right? You can see correlation builds so what is this telling you? What does this correlation tell you? Is why you correlate this returns oscillator. What are we correlating it to? Price action. You want to correlate the returns to price action. And this is the indicator we use for divergence. Also Z-score. It's flashing it too, right? Making its way down to these lower confidence intervals. Look, it's even showing it on the high length Z-score. So there's a lot of bear div. Now, is it going to play out right now? Could we see that move down there? We could. Remember, it's downside 95 for Laplace distribution range. Would it kick up from there? 95.4% probability it closes inside that range. And that's what these probabilities are about. People get confused when I start rambling off these percentages. It's not there's a 95.4% chance the data set makes its way there. It's a 95.4% chance that it does not close below there, right? 95.4% chance the data set on the daily doesn't close below like 411. Same to the top side. 95.4% chance it doesn't close above, let's just say 420, 424 area, 423.92. That's what's powerful about these probabilities and letting you know, hey, are we at the top? Is this the bottom on the daily, on the intraday? This is why you get to move like that. Oh, so powerful. So powerful, man. And it's just like if people are into the institutional gaps, we're not, right? Could care less. You talk about manipulation. It's volatility. It's when daily, weekly, and monthly ranges don't get tested immediately. Those are the real gaps, the volatility gaps. But just like people will trade the institutional gaps, right? Especially in Bitcoin, between the CMEs and spot. Bad idea if you're trading to the gap, right? Because the data set can do anything. It's volatility that's going to determine. How do you trade gaps properly? When the data set gets to the gap. That's how you trade gaps. You want to evaluate the data set, the returns once it gets there. Not on the way. This is how people get wrecked, man. This is how people get wrecked. It's one thing the caveman and me agree on. It's how to trade the freaking institutional gaps. We don't agree on much, obviously. But yeah. We're not deceiving our community. Right? And I got nothing against the guy. We're actually friends. Hopefully he banters about me too. What's that? Is this my grandson?
Yeah, Graham, it's your grandson. It's Kim Jong-un.
Supreme leader.
Kim Jong-un. I'm Kim Jong-un.
Oh my God. The supreme leader is back in the chat. Where's Trump? We need Trump in here.
Trump.
All right, HubSpy, you play Trump. Hilarious. Oh, man.
Graham, can you tell me about the indicators, like the correlation I mean, I saw all the videos, but I wasn't getting anything from that. They are also old. Maybe you can do it here again.
So you're talking about like for the volatility, the correlation?
Yeah, yeah, for the volatility.
Yeah.
Yeah.
It's here, I'll show you. Let's do a little trick here in the 15-minute. First, wait a minute. Let me back that down. Let me turn off these deviation bands. Ba-doop. And I'm just going to blow up the volatility. Here, I'm even going to get rid of the data set here. Hey, turn off the power mean band. We're blind. We're blind. I cannot see. How will you know if you're not looking at data sets what the volatility is doing? Well, I'll show you. I'm going to show you. Is that contracting right there? That's where the move started. That's where the move started. So here, I'm going to put a couple lines here. Let's see, right where that correlation broke and that started contracting. There's where the down move started. Why? Volatility contracted, positively correlated. And then when the volatility, volatility expanded and the correlation broke negative, that's where the majority of the dump came in, right? That's where the majority on this 15-minute move. So now,
But we got
boy,
the trade on the
that
5
failed
minute chart
miserably.
or lower chart.
What's that?
We have to trade on the lower time frame, not on the 15 minutes. Am I right?
Yeah, I just picked the time frame to show you on. I just picked the time frame. And so now where you see this, right? I said this is where the move to the downside started. Okay, now look, why? Why did it go up? Right? The low length was contracting, positively correlated. Here's the 981, same thing. But look, 981 wasn't contracting. 981 was expanding positive, right? 2400, right, was contracting. Look at it, contracting, negatively correlated. So this low length got overran by the 981 and the 2400. And the 981 and the 2400 was saying from here to here was going to be an up move. Then the 525, the correlation broke on the expansion. Wham, down we go. Right? Down we go. So, but now look at what's, go ahead.
Yeah, continue.
Here, I'll go to
Yeah, no, carry on. I will ask later.
yeah, it's fine. Let me get rid of these lines. SPY slowly leaking out here.
Can you do it on Bitcoin or something like on any crypto?
Yeah, I sure can. How about, let's see. I'm pretty sure, doesn't this Supreme Leader like Kava?
Yeah, I like Kava, ADA.
Holy shit, there's just no liquidity on this. This is on a 1
They
minute.
are very good for nuclear technology.
Right? Let me see here. What else you like that's got liquidity?
Maybe ADA,
Yeah.
Cardano.
Oh yeah, I'm a Cardano fan.
Aptos has more liquidity.
I knew that was coming. I was waiting for Django to come rolling in with the Aptos. We'll get to it.
Or maybe Pepe.
Yeah.
Pepe too.
Pepe.
Yeah, boy.
Right.
So we have to trade on the 1 minute chart or on the 3 minute or 5 minute.
Let's jump up here on the 15-minute. Just to,
all right.
Some volatility reads. Here's a good one right here. Volatility was totally contracted on the low length. There's the correlation broke right there. You start getting expansion. Bam, look at the down move. Whammo. So when you get expansion on volatility, look, all three lengths expanded, right? Look at all the correlation breaks, all negatively correlated. So at that point, what are you looking for to take profit? Look at grade, peeking out. Boom, second candle right there. And it's look, you would have got out at the bottom of this nice beefy candle. You wouldn't have had to mess around with the volatility on this next candle, right? The drop, boom, the quick pull back up. And this is why, too. If you would have waited, right, and you weren't paying attention, could have lost that. Could have lost a little bit of that profit. So that's what I always look for on those volatility expansions is grade to expand to 100% too. for grade. And if you're really wanting to get all the juice and you see the 981 and the 2400 expanding hard too, right there where grade peaked out, so did 981 and 525. 2400 didn't, but hey, I'm good with just those two to take profit. Right? And bam, you would have got a lot of it. It was a good move. And look, Entropy was trending too. Entropy was trending too. Crazy. So look at the sustained down move, right? Expansion, all negatively correlated. As soon as it started contracting, look at all the correlations. All the correlations broke positive. When you're contracting positively correlated, you walk down.
I have a question
Yep.
about the correlations. Like we are on the ADA chart, so we are correlating this to what? BTC or something else?
No, we're correlating the volatility to Cardano's data set.
All right.
Yeah, we're not correlating like Cardano to another asset. You can do that. That's why a lot of people don't know. There's two types of correlation. You can correlate assets together, and you can correlate a indicator to the data set to make non-directional indicators directional, or to let you know.
That was the problem I was getting because in that video you correlated two different assets,
Right.
not the indicators. So that's the problem I was getting. So how did you do that? Correlate these two indicators in the settings, something like.
Yep, 100%. It's in the settings. Actually, like right here, the way we have this set up, it's all built in internally. But here, let me show you something. Let's load up a chart. Let me see. Let me make sure. Hold on real quick. Damn it. SPY 416. Just let me make sure this thing's hovering. All right, it's at center of the weekly. Okay, you chill. I want you down. Almost to the monthly. I'll tell you that. Okay. So, but my one video, the one video about the volatility indicator, that correlation is talking about volatility correlated to the data set. I know I have another video where I'm correlating two assets, but yeah. So let's load up a chart, man. Here, let me show you something. Load a layout. What do we want to load? Man name. What's this little shitter here? Yeah, perfect. Just a blank data set. That's what I was looking for. Pop this up unnamed. Let me change this real quick so I know what the hell this is. Rename.
Rename it to Supreme Leader.
Yes, Supreme Leader. Okay, so here I have the Bitcoin data set, right? Now I'm going to pull up the Pearson correlation that with the volatility starter pack you have.
Yeah.
Let me see here. Let me pull this baby up. There it is. Pearson correlation. Okay.
All right.
What is this silly shit? Turn this volume off. How the hell? Hold on. Boom. I'm going to save this with correlation on it. Volume. Volume is... What creates volume? Volatility. So you go into the Pearson correlation. So what do we want to correlate Bitcoin to? Here, you go in right here, the symbol. So I want to correlate Bitcoin to Dixie. Bam. So now, boom, here's the correlation to Dixie. And this is what, a 15-minute chart? So right now on this down move, right, on Bitcoin, Bitcoin's pulling back. So is Dixie. Here's what you can do too. Pull up, you hit this little plus sign, compare or add symbol. Bammo, Dixie's right there. Actually, I want that on its own scale. Hold on for a second. This baby, come on you. First off, let me get this log. Whoops, no, I don't want that on log. Hold on for a second, guys. Regular. Got it. Guess it has to be on percentage. Dirty rotten. Okay. Visual order symbol. Scale. Let's scale this pin to right. New right scale. There we go. So you can see right when Bitcoin pulled back, so did Dixie. So look where the correlation broke, right? Look, Bitcoin was going up. Dixie was coming down, negatively correlated. As soon as the correlation broke, Dixie started dropping with Bitcoin. So it's a positive correlation, right? It's a positive correlation. But you go up here like on a daily, wow, positively correlated. So you got Bitcoin running with Dixie right now. You usually don't see that. Let's go up in on a 5-day. Yeah. Well, it's starting to come out. All right. You got Dixie pulling back. You got Bitcoin pulling back. You can see the correlation is sloping positive. Doesn't matter if you're down on the bottom side where it's negatively correlated or the top side where it's positively correlated. It's all about the slope. It's all about the slope. What's the slope doing? Is it heading positive or is it heading negative? That's how you use this. But that's how you correlate two assets together. All right, that's how you correlate two assets together.
All right, and then how to use both these indicators together, like the volatility and this correlation together.
Right. Here, let me show you. Let me show you. Let's get, what should I pull up here? APP. APP. Where are you? 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 You know what? How did we? Give me a second here. Where are you at? Alpha volatility. We got so many indicators. Give me a second. There it is. There's AVP. Oh yeah, and I had it set up. I have it set up in line form too. I forgot. Interesting. So AVP, here's what you know what? Let me pull up the volatility starter kit. Give me a sec. So I do have this. Where are you? Where are you? Where are you? Where are you? Check that SPY data set right where I left it. Man, oh man, I got too many charts, man. Where in the hell are you? There it is. Why is that not highlighted? There we go. I'll bring it down. There we go. Let them all populate. Okay, so is what you're doing. You're going to put first you're going to load the volatility, right? Then you're going to load a Pearson correlation.
All right.
Then you're going to go into the settings right here. You got source one, right? AVP. Bam. Make sure the indie settings on AVP. So when you go to the correlation's going to know this is what you're correlating the volatility indicator to. All right. So you go into here, bam. And then right now default is probably Bitcoin. Let's go to it. Which one? Oh, let's see. Wait a minute. Let me see which one I got it on. For crying out loud. What is that? Bitcoin US dollar index. Okay. BTC index. Where are you? Boom. Badamo. Badingo. Now you've got the volatility correlated to price action, right? Correlated to price action. Thing is these are already the default current symbol input, right? You don't have to change it. You don't have to put that in. Is the way we have it set up in the code is that whatever you have the data set on, the correlation will be for it. You know what I'm saying? I was just showing you that what you have to do to actually correlate it, but we have it default in the code. So all of these are correlated between volatility and the Bitcoin data set. That's all you're doing. It's correlating that. And let's see. You can see right here, right? Volatility contracting right here. Look, right when the volatility starts to contract, the correlation broke positive right here. And you see the walk down. Positively correlated contracting volatility starts a walk down. Then when that volatility expands and the correlation breaks negative, bam, there's the dump. That's how moves usually start, right? You'll get
That's a big jump.
yeah, you'll get positively correlated volatility walking down that ebb and flows right into an expansion in volatility in negative correlation. That's how most moves start, a walk down and a walk up with a pump or a dump after. That's usually how they happen. But yeah, that's the short on it. You got to study, you got to get chart time in. That's all you got to do. That's all you got to do, my friend.
All right, now it's clear to me.
Good.
What's this? This one?
What, this?
Yeah, this one.
This
These
is the
lines.
yeah, it's just me drawing on my chart. No, I'm just kidding. This is the volatility range estimator, and I've got distribution levels, normal and Laplace, overlaid on it. Focus. Focus, Supreme Leader. This is what we need you to do. Is master this.
No,
Master
all
the
right,
volatility
thanks,
first. This is
thanks,
like
Graham.
think of this. Yeah, you're welcome. Think of this as like, right, we're in middle school. This is high school. Right? This is high school. This is you're moving into college. That's the way I like to look at it. Perfect levels. Figure out the volatility first. We actually got the alpha laser return cell here to start to help to get reads on divergence. But yeah, start with this chart. Then when you move into the free trial of the indicators, then get a good beat on this chart and then move over to here. All right. Once you figure out the volatility ranges and the distribution levels, then you can move over, start messing around with variance, all this fun stuff. But you want to see the most powerful indicator? This variance indicator, amaze balls. Okay, so what is variance? Variance is the spread of data around the mean. Why did this brokerage account kick me out? Probably because I'm not active. Give me a second. Damn it. Over here to throw a trade in. Not even logged in. There we go. Yeah, expect to move to the downside a little bit. Of course it did. The data set's pulling back. Let me check on this real quick. Yeah, it's bouncing off that, isn't it? Yeah, it's bouncing off center of the weekly. Right into this tight daily range. I'm looking for a rejection there at some point. Come down here, test the monthly. I mean, it's sent a wick. Now, when it comes percentage-wise, it's actually close enough. It's close enough for a test. I'm telling you, man, these data sets love to get into it a little bit. Love to get into it. Considering the bottom of the weeklies right here above the top of the monthly, God, that'd be a perfect little area right there. Perfect area. Back, though. Let's go back over here. So we got pure variance. Variance is a spread of data around the mean. It's volatility. Standard deviation of returns is volatility. So how we have this variance indicator set up, the outside line, at least you can set it up a bunch of different ways. The way I have it set it up, the outside line is telling you the correlation of the expansion and contraction of the variance. The inside line is telling you when there's an outlier. Outliers are pink. The inside line will be pink. Regular variance, the inside line will be white. So what's an outlier, right? What's an outlier? Outlier is a fat tail event within the distribution, second standard deviation move or greater. So you can literally, just by looking at this indicator right here, let's pop it right on here. Red. Yes, we want that red. I'm even going to blow it up a little bit. Let's get 2. There's a pop to the top. And actually, that started right about there and then went into an outlier, which is good. Let's change that to green. There's a little move to the downside. Let's make that one red. A little outlier action. Come on. Wrap it in. Wow. Cardano. You get dumped a little bit, haven't you, baby? There's a little bit of an outlier right there. Make that green. God, there's a big dump right there, man. Along with this one, that'll be a big down move on Cardano. Both these outliers. I mean, there's just a short. There's a little bit of a short example of what's happening here with the variance. Spread this back out. Okay, so right when you had that outlier, did we have an outlier? I don't even need to look. That's 95.4% Laplace distribution range, probably to the dollar. Bam, right? Here was a bigger one, right? Downside move. Bam. Why? You were having an outlier. It was negatively correlated. Boom, negatively correlated. Here's the first up move. Caught it in the middle. Yeah, that was a little tricky right there. That was a little tricky. Look, you had the outlier start, right? Had the outlier start, but probably because this pulled back so hard, the variance, right? It was negatively correlated right there going into the next candle. But yeah, the whole move started back here at the little bit of the outlier that started there. Boom. You can see within that same candle, you had an outlier to the top, wham, and then it pulled back so hard it created a negatively correlated outlier. But here, right, variance turned up positively correlated, then went into an outlier, moved to the top side. This is a powerful indicator, man. Powerful indicator. You can literally turn off the price action. Guys, I can trade without even looking at the data set using these indicators. That's what a lot of people don't realize. Do that with traditional TA. See how that works out for you. Using lagging indicators. Look, this is real time, man. This is real time. This isn't a stochastic. This isn't a lagging indicator, right? This isn't an RSI. None of that, man. This is actually real time information. Let me remove these 5 little lines. I just wanted to show that. We used to do this all the time. Let's have fun. Let's turn off the data set. Let's go. Okay. 418. Yeah, it looks like SPY wants to bounce out of that area. Let's go, baby. I mean, because, like I said, you got a wick down underneath center of the weekly there. I mean, that was so close. What is that? Top side, 416.29. Yeah, I mean, dude, we got within like 50 cents. 50 cents of it. I mean, SPY could run like a mad dog right now. Really could. Let me take a look at Dixie. Didn't see where Dixie's new monthly's at. Dixie's weak, man. I'm telling you right now. Oof. Oof, oof, oof. Where are you? I mean, the Dixie's down here in the... There it is. I can't believe I didn't look at it last night. It's all good. Test, I mean, Dixie just tested the top of the monthly, right? On that 15-minute candle, got a wick. That's the top side of the monthly right now. And you've got weekly above the monthly, daily. I mean, as much as Dixie, when it comes to the volatility ranges, are set up bullish, Dixie's weak, man. Dixie's weak. Unlike SPY. SPY's strong. SPY's VRE is set up very bullish. It's set up almost exactly like Dixie. Something's got to give. What's going to happen here? I'll tell you right now, if Dixie could get, this is a pretty big monthly range. What's the top side? 103.76, probably a whole point. Yeah, pretty much. Whole point range. Let's see what happens here at center of the weekly. All right. If SPY's data set gets down in this monthly, or let's put it this way, can't get back up above the top of its weekly, that's a little shot across the bow. This thing's probably going to go deep into the monthly range. If that happens, look out, man. These markets will fly. Now, especially Bitcoin and SPY, probably fly. They're probably highly correlated right now. But something's got to change, right? Because we just looked at Dixie and Bitcoin in this down move, right? They were correlated. That will break. Very rarely do you get the dollar correlated positively with SPY, Bitcoin, gold, any asset, right? Because a strong dollar, usually a strong dollar, going to bring the markets down. Going to bring the markets down. So let's see here. Weak dollar, markets are going to pump. The markets are going to pump. And just like, we heard, and I see it every day. I see it every day in the family business, in the restaurants. People throwing money around like crazy, man. Recession? What? What's going on? People are spending money, man. People are spending money, not so much buying Bud Light or shopping at Target. What a shit show. What is going on in this country, dude? Are we in the Twilight Zone or what? What the fuck? Ah! Was born in the wrong decades. I remember when I was a kid, you had to ride your BMX around trying to find your friends. There were no cell phones. You went outside and played. God, I was driving the other day. There was 3 kids walking down the street on a busy street. Every one of them's on their phone. They're walking next to each other. Nobody's interacting. We're losing our way, man. We're losing our way.
Graham, you had a beautiful childhood.
Yeah. An EMP would be a blessing right now. A big solar storm just to crush technology. Everybody'd start talking to each other again. It'd be amazing. Be amazing. Definitely losing our way. My God. Nobody communicates anymore. Mom, you out there listening? You should come into Discord and tell you, my brother and his wife, they text each other inside the same house. They won't even, hey, honey. They just text each other. From like the man cave to the living room to the bedroom. It's just, I can't do that. I come home, woo, unless I'm on the charts. It's like I try to stay off these devices, man. Trust me. My God. Get out. Touch some grass. Touch some grass. Could even smoke a little if you wanted, if you're into that kind of stuff. Let's see. SPY's bouncing, man. SPY's bouncing. So we'll have to see. Dollar, look at all the volatility the dollar's in right now. This shit could get wild. When you get all the volatility, the macro volatility all together, weekly, monthly, you get the daily in here. Oh my God. The data sets can fly around. Really can. Gold hanging right at that 1972. But, guys, first day of the month, right? We just let this play out. We can just see what happens today. First day, who knows? Who knows what's going to happen? Pretty crazy times. Pretty crazy times. What's that? 417. Because you don't always have to be in the trade. And if you're just investing, stop looking at data sets because it doesn't matter. It's like you got to, why am I investing in this? Right? What am I investing in? Doesn't matter. That's why people that are just investors, they start talking about price. I'm like, why do you even care? You're investing, right? For the future. Or are you trading? If you're trading, it's a whole different story, right? But I highly recommend, if you're just out there and you're trading traditional markets, guys, learn options, please, for God's sakes. Get away from any type of futures, man, in my opinion. Trade intraday volatility. Find assets that have 0 DTE options. So powerful. So powerful. Wait till they open up the floodgates and get rid of the day trading rule, because it's coming, man. They're missing out on a lot of money. It definitely is coming. It's an antiquated rule. It's ridiculous. It's ridiculous. Where's P-Funk? He'd tell you about the day trading rule. Had Spike Price say the same thing. Screw the day trade rule. That's stupid. It really is. Especially with the degens out there today. Oh, God. Can you imagine the degens bringing that liquidity into the 0 DTEs? The algos are just going to be like, let's go. Let's go. Let me see here. Matt, Alpha Trading. What the hell are you doing? At least you're here, my friend. You on a phone call? Yep, he is. He's a busy man. All the Alpha Trading guys.
Yasha?
Yeah, good. He's busy, man. Yasha's super busy. I mean, he's got a big business he's running too. And just like everybody else, hectic family life, kids, wives, dogs. No, he's around. He's around. Probably just busy. It's that time of the year. For Matt too, super busy.
We have new people. Graham,
You guys would be surprised who the founders of Alpha Trading are. I mean, it's not like we're Matt will laugh at this. It's not like we're just a bunch of pizza deliverers or something.
Really?
Matt'll get that joke. But yeah, I mean, these guys, yeah, hey man, they work. They have real jobs, and none of them are out there simping, man. They all got pretty good jobs. Supreme Leader, what were you saying?
I was saying we have new people here.
Oh
like
yeah,
Pedro
yeah, Pedro
and
Illuminati. Yes, we got all kinds of new people, man. Dude,
Illuminati.
when people
Illuminati.
know the Supreme Leader's cooking up in this chat, they just come. They come flocking. They're interested. They want to know what's going on over there.
They wanna be friends with Supreme Leader.
Yes. We all know, the Supreme Leader asked for funding for the missile programs. So, we're trying to find them some liquidity. We have way too much fun here.
Yeah.
God forbid if somebody for at least a day changes their Discord name to Trump. And then we can have the Supreme Leader and Trump in the chat. Jesus. And if there's any Biden fans out there, they're hard to find these days. But yeah, we can get a little Biden in here. We can have everybody. Jesus.
Biden is sleepy every time.
Bruh, it's ridiculous. He's a puppet at this. Well, they all are, really.
I don't think he's even real. Maybe he's a robot.
He could be a robot,
Won't be
man.
much of a conversation.
Duh, wouldn't be at
Or
all,
maybe
man.
a reptile.
That's unfortunate too, because I'm a patriot, and it's just because as a patriot, you get. I mean, damn. As much as I don't like the guy, it's just like, can you do something right? Can you not act like a total puppet controlled by the deep state? Because it drives me nuts. I mean, you got to back your president in some way, shape, or form. It's just not American, but didn't vote.
But when you show you're such a criminal,
yeah,
I mean,
man,
how can you be more obvious criminal than that dude?
It's hard, man. And the hardest thing is the mainstream media doesn't pick up on it, and so you got a whole part of the population that doesn't even know about a lot of stuff, which is sad because there's a lot of bad things going on. I mean, if everything's true of what they say.
That guy Joe Biden, he likes kids, man. I have seen his video sniffing kids.
He is he's a kid sniffer for sure, bro. He's more than a kid sniffer. He sniffs everybody. It's weird, man. It's weird. But hey, it's a known fact. It's a known fact. For God's sakes, the guy's taking showers with his daughter and shit, right?
What the fuck, man?
It's just there's a lot of insane shit, man.
I'd like to have 4 more years of Trump just to see all these whining piss ants all over the place, just whining all over themselves.
Right. Where, look, do I agree with everything? Like the way does Trump act presidential? That's besides the point. Did he do a lot of good for the country? Hey, man, look what the hell has happened since he's been gone. It's ridiculous, man. But anyway, we should probably get off the political train because everybody's got their own position. We don't want to piss anybody off. It's all good, though. As Americans, look, it doesn't matter who's in the White House. We need to come together. If we do not come together, this country is fucking in trouble, man.
Yeah. We need the volatility.
Yes. The divide and conquer is working. So we need to come together. It doesn't matter what color you are, what you believe in. You need to come together as we're all Americans. We're all Americans.
Make America and North Korea great again.
Right. Exactly. I mean, we get Trump back in office, he can go back over and visit you, Supreme Leader. You guys had a good time.
I will make tea for him.
Well, it's a huge difference.
One thing sure, we know we're going to spend another $5 trillion. That's for sure.
Jeez, my Louise. It's insane. It is insane. And then this whole debt ceiling fiasco. I mean, what in the fuck is going on, man? It's insanity. Bag it. Raise it. Just turn it into gold or Ethereum. There's no we can just turn this thing on. Never turn it off. Let's print our way out of this. Let's just print our way out of it. It's insanity, man. Somebody had a good point about that. They're like, hey, maybe it'll work. Let's try it.
Graham, what's the debt ceiling deal is happening in America? Do you know anything about it?
I know,
What's
well,
it about?
I know that the speaker got co-opted big time. The deal that the Republicans put forward, everything it's just been blown apart, man. The Republicans are literally
And
getting
how
ready
is
to snatch him out of his
crypto market?
position.
They're going to stamp it and approve it. That's what they're going to do.
Yeah, probably, man.
For sure. It's done.
Yeah.
It's done. They got another $5 trillion. They're happy as, when you see the Democrats get on board, man, you know we're going to be spending some money.
Yeah. Spending the cash. I mean, look how much money they're sending
And
over
how
to
will
Ukraine.
this affect the crypto market?
What's that?
I'm asking how will this affect the crypto market? Like, is it good for crypto or bad? Something like this?
I don't even, when it comes to news, I don't even dive into it, how it's going to affect the markets. That's why I just use the VEPS. That's why I don't like trade high time frames. Or the only crypto I invest in is Bitcoin for the future. I don't even care what the price is. Got a standing order buy every week, pull it out every week, throw it in the ledger, just slowly stacking Bitcoin. I don't care what the price is because I know this could happen so fast. The price squeeze on Bitcoin, when it happens, there's not a lot available. If you look up and see how many millionaires there are around the world, I think at this point there's almost 60 million millionaires around the world. Bitcoin trades around the world. What if now some of them, let's not say a lot, are already getting into Bitcoin. What if they all realize that it's the new store of value going into the future, and they all just want a piece of a Bitcoin? They all want a Bitcoin or whatever. Guys, go on chain and look how many are actually available on exchanges. And look how fast that could squeeze. It's pretty powerful. Bitcoin could go to $1 million freaking dollars overnight. That's what people don't understand. What if the Chinese came in right today, and even just a couple million of them started buying some Bitcoin? Jesus, moon time, man, moon time. So we're just gonna have to let it play out. That's why I just trade low time frame volatility. I stack Bitcoin. And that's what I do. Like even in the traditional markets, right? Even in the traditional markets, take that profit out. I buy Bitcoin. All right. So that being said, I don't really, when it comes to the news, it makes no difference to me when it comes to the markets. Because how many times have we seen news jack people, get people in bad positions, right? The news says, oh, the markets are going to dump. Like, look at SPY, man. For God's sakes. Everybody's like, we're in a recession. This is the worst ever. Oh, we're doomed. Really? Are we? Go over here. Let's go on a macro time frame. Just on the 5-day, man. Resilient little booger, man. My God. Resilient. I mean, we're like 60 points from the all-time high again. Not even. What was it? Like 480? Yeah, man. 63. Don't be shocked. That's why I don't listen to the news. Doesn't matter. Doesn't matter. God, just go out. People are spending money like crazy. People are spending money like crazy. Let me see. Let's see here if anything's moving hard. Natural gas getting ready to break $6 a US fund. It's fucking doomed, man. Had literally no pump this winter. Let's see. We got Baba. Oh, let me check this chat. Talk more about the daily options and why they're better when trading traditional snakes. Didn't used to be. Didn't really used to be, but yeah, you're welcome trading with Khan. There's a lot of liquidity in these 0 DTE options. And the reason why I like to trade them is because of the tools we have, right? It's not just guessing. We're not using like traditional technical analysis. We're literally, what are the algos doing, right? Where's the volatility ranges at? Where's the distribution levels at? People that have been watching this stream for a while, and I think you have, Chris, you notice when we go over these 0 DTEs, what's our hit rate? It's high. It's real high. It's going to be a lot higher than anybody else out there, right? There's a lot of people out there that claim this, claim that. Start a stream, man. Let me see what you're doing. That's what a lot of people are afraid to, like, get out, put yourself in the public eye when you're using these tools, and whatever your strat is, whatever you're doing. A smart person, right? We never said we're smart. You create a trading system like we've put together. You're literally probably starting. You're going to start a hedge fund. You're going to get 5-6 guys together, right? You're going to start a hedge fund. You're going to start making some money. Although, what happens to hedge funds every day? They get liquidated. Why? Because they're not using the VEPS. These hedge funds, even the hedge funds, I think some of them don't even realize what, if you understood the behemoths you're up against when we're talking about these HFT firms, you will shit can traditional technical analysis in a heartbeat. You can't use lagging indicators to be able to get a beat on what the returns and the data set's doing. You got to know when there's an imbalance in the buy and sell pressure. You got to know when the data set is spreading from the mean, when the returns are spreading from the mean, right? With the variance, volatility, entropy, all this is so powerful. But that's why it's really easy, man. Those 0 DTE options, powerful.
Oh, I mean, not only that, I've been since I've been following it, I've been tracking your 1 DTE, your 1 days. Those are like 100%.
They're almost, man.
And in fact, I've done a couple of those, and just doing the 1 DT, just 1 day out.
Yep.
Man, those are about as solid as it gets.
Yep. The times you'll see me, when I'll get in, it'll be like in the afternoon session, and I'm looking for like bear div building. That's what I'm really looking for. Some bear div building. I mean, look at the 5-day. Look at the 5-day bear div. Now, I'm not going to trade on that. I'm just saying there's bear div on the 5-day. But what's that set up? Hidden bull. Hidden bull. And you can see all the way. Let me see here. Where are we? I mean, it's actually a really clean chart, right? It gets to become a really clean chart right here till the end, huh? Setting up this bear div. Got these lower highs. But yeah, so I'll be looking on lower time frames, especially going into the close. That lasts like, it's not even a full 4-hour candle, but I'll be looking for divs on the low time frames is what I'll be looking for, especially if it's closing with that divergence. I'm not afraid if there's bear divs showing to get in and buy a put for tomorrow. Then you wake up and you see the pre-market dump. God, it's as easy as boom, market opens, close the trade. And you'll usually see, it's so easy, man. And usually immediately.
Yeah, I've done that twice.
Nice.
Since I started this, just, I don't do the 1 days very much, but I track it just to see how it plays out.
Right.
And it's pretty solid.
Yeah, for sure. And it'll show you, right, when the market opens, that volatility, the expansion immediately on like dumps or pumps pre-market. If the market opens and that volatility, boom, just shoots to 100% with grade, that's telling, just take your profit. Could you get more juice? Yeah, maybe, but it's the volatility literally telling you to scalp that, get that profit. So yeah, that's when I get into the 1 days.
The two I did were 2x, just right off, just open, get out.
Yep.
Done. Didn't care.
Yeah, for sure. Yeah, it's usually nice quick pops, easy trades, no doubt about it. Well, let me check something real quick. That thing's still not going through. You dirty ass. Yeah. Well, leave that chart. Boom. Whoops. I was watching a vid. Billy Carson. Good dude. If you want to dive down the fucking rabbit hole, go watch some Billy Carson vids. Let me see here. Yeah, we're starting to contract on the 15. The low length's contracting, positively correlated. Look at these other, let's see these other volatility reads. These things going to flip down and start contracting. If they are, everything's positively correlated. Drop down. Where did that just go to? Let's get SPY back on the VRE. Yeah, another wick down, huh? Trying to stay up above this daily range. I mean, you shot up to the top of the weekly. It's rejecting there. All right, it's rejecting there. And you just got that last 15-minute candle sent a wick to the 68.3 Laplace top side. Little skinny line pulling back. Look, pretty much that 15-minute candle ranged in the 4-hour 68.3 Laplace. Looking like let's just create a little chubby doji. What are we doing here? Still waiting for a deeper dive. Really think. Doesn't have to. I got close enough, but I think they want to take advantage of some people that are overly bullish, right? Trying to swing trade some volatility, which is a bad idea. Real bad idea. Yeah, that top side expected move. The expected move's right back where it opened. Right back where it opened. Let's go to these lower time frames and see what's up here. Yeah, there's the hidden. All right. So we got the data set pop, created a lower high. Higher high on the returns oscillator. Right? Higher high on the returns oscillator. Big time. But you can see the pop right here on the 9-minute. Look, lower low. Look at the returns oscillator. Higher low. Positively correlated. All right, right when it started. And you know what? Right to the top. Man, that bad boy. There's the correlation right there. Let me check something real quick. I was messing with my lengths. Yep, 9, 9, 10. Okay. Boom, 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 boom. You know what? I was going to switch that baby up. I'd had it on there for a day. I don't know if I like the 9. I love the 9. Don't get me wrong. But there's magic happening in the 7. Let me reset this as my default. Back to a 7 length. There we go. It's not going to change much, but trust me, in little quick moves, it's there. So yeah, so there's the bull div. Pop that little run up. Then it just set up hidden bear, pulling back down. Now the chart's clean, right? Now the chart's clean. What's it going to do? Total random walk too. The last trend we had. So look, and this is why we have our I have the line on the entropy. This is set to our prediction model. So when you see entropy going to trend and the prediction model saying to the downside, hello, you can ride that baby all the way until that thing flips. Usually it's going to flip right when it pulls back up inside the second standard deviation band. I mean, look, that's right at, as soon as entropy turns up, look where entropy turns up, right at the bottom, right? This was all trend. That's what that's telling you. Since then, since that, all random. This is a 9-minute, obviously. This is a low time frame. All a random walk. So when you got people out there, you know, if you're watching vids and they're not using an entropy indicator and they're talking about trend, dude, come hail us, right? Come ring us up so we can see what they're talking about. Because in our opinion, this is the way. This is the way. Entropy to figure out if you're in a random walk or you're trending. It's that simple, man. It's not like magic. It's just going to tell you when the data set's in trend, and that's what you want to know. That is definitely what you want to know. I mean, because you get on low time frames, people think moves like this are trend, right? These are trending moves. No, they're not. It's all random. In the high frequency trading firms, they're just running the distribution, man. They're running the distribution. You got the bulls and the bears. They're retreating, they're advancing. They're retreating, they're advancing. It's nonstop. Low time frames, you jump down in the Shark Tank, dude, it's trench warfare. It's blood and guts and madness. It really is. People are getting wrecked. That's why most people won't go down into these time frames and trade. And that's one thing a lot of these YouTubers out there talk about. Well, don't trade the low time frames in crypto. It's way too volatile. I mean, once you come to alpha trading and then you hear shit like that, you just giggle, right? Because that's what you thrive on as a volatility trader. We want volatility. Captain Caveman will say, don't trade volatility. right? That's what he used to say, but now he's slipping in a volatility indicator, talking to people about volatility, but selling them traditional TA indicators, lagging indicators. Come on, man. Get on board, bud. I know you think it'll wreck your whole thing. Just create a volatility suite to replace the shit you're selling. That's all you got to do. Probably increase. And he gets a lot of views. That's what's scary, man. Some of these YouTubers get a lot of views. There's one specific out there who is the biggest goofy jackass on the planet, right? His dad loves to sue people.
Jimmy.
Yep, YouTube Jimmy. And this guy's been around since like before the 2007. I think he popped on right around the start of the 2017 bull run. What a joker, man. Unbelievable. Some of the shit he talks about. And newsflash, most of them are wrong all the time. They flip back and forth, right? They flip back and forth. They're bullish, they're bearish. They're bullish, they're bearish. They're bullish, they're bearish. That'd be okay if you were trading intraday time frames. But they're not. They're teaching people how to swing trade volatility with leverage. For crying out loud, that is the worst thing you can teach a trader, right? God, man. That's like a brand new baby. You're like, screw the baby food. We're going to stick a steak down his throat. We're going to start this baby out with steak and just pretty much kill him. It's ridiculous, man. It's ridiculous. We're trying to help retail traders, not get them wrecked. You know why these YouTube Jimmies do this shit? Because these exchanges pay them in Bitcoin to do it, and they pay them a lot. I talk to people, and they're like, "Oh no, he knows what he's doing." It's like, really? It's a joke. Do you realize that the exchanges are paying him in Bitcoin? You're buying their trading programs, their educational programs, their trading psychology programs, which is a massive scam. That's how they make money. They are not traders. I've had an open invite to several of them for years now. Have they ever bid on it? No, and they never will. I'll crush their dreams. All their subscribers would move right to alpha trading. They don't want to do it. They don't want to be exposed. That's the biggest problem out there. That should be a sign. Because I've seen some of them amongst themselves get into these little trading competition stuff. They'll never do it with us. Never. They never will do it. Our shit scares them to death. They want to put out the perception that they make money trading. And if they're ever showing any live trades or anything, trust me, man, these guys got several accounts. If they're long in something, they're shorting it in the other account, right? And then what do they do at the end of the year? They'll take the account. They'll take the account they lost the most on. They'll write it off on their taxes. It's a scam out there. If everybody realized what these YouTubers were doing to get all their clicks and shit, you guys would dump them in a heartbeat. And I hate saying that because a lot of these guys, all their indicators are on TradingView. We're streaming on TradingView. Our indicators are on TradingView. I like TradingView because they allow us to go against the grain. Talk to people about the VEPS, volatility, entropy, probability, and statistics. You know, we take this to YouTube. Dude, we were shadow banned from day one. You guys need to realize what we're attacking here. Finance, money, right? The big firms out there. That's why if you Google the VEPS, if you start looking into all this information, you're not going to find anybody teaching it or even talking about it. Options traders, you'll hear them talking about volatility. Most of the times, just implied volatility. I've tried to get Tasty Trade on board with the AVR, with the APPs. For Christ's sakes, I told him I'd give it to him for free. For Christ's sake, you don't have to buy it. I'll give you the indicator. I just want you guys to start looking. It's not all about implied volatility. You like implied volatility? We've got it combined with historical volatility, which Tom really hates. He can't stand historical volatility. Well, Tom, I got a news flash for you, buddy. When you combine historical volatility with implied volatility and overlaid on volatility percentile, you have got magic at your fingertips, man. Magic at your fingertips. I kind of went off on a sidebar here, just talking about all this, but it needs to be known, man. It needs to be known what we're doing here. It really does. And one trader at a time is what we go after, right? And not to extract money from them. For crying out loud, we have a free volatility starter pack. That chart I pulled up earlier, it had all the volatility reads and stuff. That's totally free. As long as you're in the Discord, you can keep it. And then we have a free trial for all our indicators, right? And I'm telling you right now, don't come into the Discord and immediately ask us to buy the indicator package. We want you to learn first, right? Who else out there? Which YouTube Jimmy's out there? Don't buy my stuff. Come in. I'm going to teach you for free first. Make sure this is for you, because this takes a lot of time. It takes a lot of time to learn. It's totally different. You got to shit can all the old stuff. Here's the problem. People will get it. They'll come in. And I know there's people out there, right? You're just bouncing. You're trying to find it. You're buying these indicators and those indicators and this educational program. You're all over the place. We've all been there trying to find it. We don't want you to come straight in and buy it, because it's going to overwhelm you and you're going to just revert back to the old stuff while you got magic at your fingertips. You paid for the package. You're not even using it because you haven't learned the basics of volatility first. If you jump into all this and don't have the basics down, you're going to get lost real fast. Going to get lost real fast because a lot goes into this. That's why I always have 3 charts up. And when I'm trading, dude, my monitors are full. I'm not flipping through tabs. I'm looking through monitors, right? I'm looking across monitors. When you're scalping 1 minute, 3 minute time frames, you don't have time to be flipping through tabs. It's all part of your edge. People think an edge is just a pack of indicators. Farthest from it. That's the least important, to be honest. The indicators are the least important. The main part is to always take your profit, always limit your losses, and never be emotionally attached to your trades. Guys, you don't need indicators to trade like that. You could literally wake up in the morning and flip a freaking coin. Heads. I'm buying calls today. Oh, the trade went against me? Exit. I lost 20 bucks. Maybe tomorrow better. Flip the coin. I'm going long today. Boom, you get the move. You take your profit when the volatility expands and everything expands to 100%. Grade in the low volatility read. That's what we do. All right. So yeah, come in. Meet everybody in the Discord. See what we do. Ask for the free volatility starter pack. You want to jump right in and get the free package? You can do that too, but it's only for 2 weeks. It's only for 2 weeks. And trust me, if you don't have the basics down first, that 2 weeks, like I said, you'll probably give up after day 1, revert right back to what got you here in the first place. That's what always blows our mind. It's like, guys, give it a chance. Give it a chance. We got 419. Yeah, man, this thing's kicking up, which is good. Let's go. All right, just hit the first resistance level, right? Wick right to the first resistance level of this tight daily range. Pulled back from it. Now, remember I was talking. What are we going to do? Hit the bottom side 95 for Laplace or top side today? Why do I think that's going to probably happen? If it doesn't get all the way there, we're definitely going to see one SD move. Is it going to be to the top side, 421.5, or the bottom side, 414.5? I mean, right now, looking pretty bullish. Looking pretty bullish to make a 1 SD move. It starts closing 15-minute candles, or say for this first 4-hour candle closes above or below the 1 SD. Look for the 95 for Laplace to get nailed. Here it is to the downside. What we got? 411.25. Top side, 424.25. Big range, right? This tight little daily volatility range is telling you this is doable. This is doable. I wouldn't be a bit surprised to see this thing freaking range in the 1 SD. Maybe shoot up 1 SD, down. I mean, just getting people in bad positions, man. Getting people in bad positions. You don't ever have to worry about that if you're taking your profit quick. That's what we're all about. Filling tiny buckets. Why people are literally sitting in swing trades and all this volatility. They don't realize, dude, that is a waste of your buying power when you could be trading the ebb and flow of volatility on intraday time frames every day. There you go. You just became a professional trader, right? You're starting to build a real edge. You've got a great risk management strategy down. You've got a great set of indicators, right? Your emotional state's correct. Get her done. It's time. Attack the markets. Ride the algo's coattails. That's all we're doing. We'll never be able, as a human, you're just not fast enough to trade one-to-one with these algos. We're just jumping on their coattails, picking up the crumbs that these big-ass machines leave behind. They're just like the Cookie Monster. Fucking shit's flying everywhere. Blood and guts, man. They are chewing people alive. It's great. It's fantastic. 10:45. Jesus. That went quick. Yeah, man. It pumped last week. So I say that. All the commodities are starting to rip. Let's see here. Wow, goddamn, wheat got nuked. Good Lord. Yeah, we've got soybeans, wheat, rice, corn. We already went over rice the other day. Crazy numbers. How many metric tons that freaking rice gets eaten daily? It's just incredible. Incredible. Yeah, nothing's really sticking out. It's SPY's on a mission, though, I'll tell you that. Looking like it wants to run. Yeah, I'm looking for this 1SD. 1SD. Now, that could have been a great trade, right? Bounce off of the center of the weekly. Bounce off center of the weekly. Come up here to maybe second resistance level. 420. Hey, 420 calls. Hell, 420 calls right now are only 55 cents. That shit could be in the money. That could close in the money. You close the first 4-hour candle above that first standard deviation. I'm telling you, man, 420 call could close in the money and be worth Jesus. Who knows? Who knows? At close though, probably $1.20. But you're gonna get the beat. You want to get it at peak. You want to get that premium in the first 4-hour candle, to be honest, because man, that premium starts to degrade so fast. By the end of the day, it just drain right out. So if you ever do, you buy a call or a put, and in that first 4-hour candle, it gets in the money, take that profit because it's going to probably be a 4 or 5x for you. Take that profit. Yeah, it's on a mission right now. It's running. Let's see. Yeah, nice little outlier just started too. That's on a 9-minute. See if we've got a 15-minute outlier. Yep. What about a 33-minute? Probably. Yep. Ooh, I like this too. No div though. This baby's just cooking. Actually, no, it was hidden. Boom. Look at this little nook and cranny right here. So that's some hidden bull bouncing. Look, positively correlated. Right when it crosses zero mean, you got that nice move on the 33s. Beautiful, beautiful. Everything's expanding, positively correlated. Starting to drop out of a random walk. It's still random though. Still random. And so right now, what's it setting up? Setting up hidden bear, right? Just setting it up. There's not a top on the data set. There's definitely not a top on the returns oscillator yet. You get a big move here. This returns oscillator could get a higher high, right? Could get a higher high. And then I'm telling you, and where would that be? Let me see here. I bet you pull that data set up around 420. You're going to see this returns oscillator really pop up here. And you get up above that. What's that at, right? There's the 1SDs at what? 421? The 4 hours at 420. Got to get by it first. That's the 4-hour first standard deviation. Right? Got to get by it first. But then again, remember, there's the top of the daily range. So if we do get a wick up into the 95.4 Laplace, if that were to happen, you're going to close. Very high probability you're going to close inside the top side of those resistance levels. But you want to find support here on the top side of the 68.3. right? And that's what happens with all these volatility ranges, all these distribution levels, right? You've got the bulls and the bears. What are they doing? What are the buyers and sellers doing? Are they retreating? Are they setting up shop at another level? That's what you're looking for. Or are they proceeding, moving forward, attacking the front? But that's why first day of the month, I'm kind of chilling, man. I want to see what happens at the close today. I would have really liked it if this wick would have got into the monthly. That would have made me feel a little more bullish intraday. But since it didn't, there's still a probability this moves to the downside. I'm telling you. And you've got the one SD down here right at the center of the monthly. This could go either way. Do I think it's going to reject at this first resistance level? Not really. Not what I see on the chart with the volatility and stuff. All these outliers happening. Right? But here's what you can do. So on the 33-minute, got the outlier. Pull this up. Put on a projection boss. Whoa. Let's go to the daily first. There we go. Let's move this forward a little bit. Drag and drop this baby all the way up to there. Now throw it on the 33. And let's move this up one. Oh yeah, we're already there, baby. So now this 33-minute candle, right? Is it at 95 for plus? Yes, it's above it. This 15-minute candle closes above there. Boom, there's that 421 area. There's real close to the first standard deviation on the daily, for the daily, right? So if this 33-minute candle that closes in 17 minutes can close above that 95 for Laplace on this distribution projection, could be powerful, man. Could be powerful. Speaking of that, let's drag this back to the top. See what this thing's doing. If anything, yeah, right back up to the bottom side of the 68.3. Got a wick right to it. You can see dip down below on the projection a little bit. Mean reverted right to the center. That's the white line. That's the mean of this distribution. Then it dumps down. Made a run to the 95.4. Wasn't having nothing about it. Wanted to come back up to the bottom side of the 68.3 where it just rejected from. Yeah. Yeah, that's powerful stuff. Powerful stuff, man. We love our projection, boss. And we're still working on getting this thing on traditional markets to project from the current candle. If you guys knew how powerful that indicator was with options, woo! Because if you're buying an option 45 days out, you can especially if you're selling. What if you're selling a strangle? Dude, guys, you can go out 45 days, see where the 95 for Laplace is. And I guarantee you, most times, if you go up and you go over into your brokerage and you look at the expected move, or let's just say the 20 delta calls and puts, it's going to be real close to that 95 for Laplace, right? So you can literally sell a call on the top side, sell a put on the bottom side. Bam, you're good to go. You have a massive range. That's why it's like options are made to sell. When it comes to zero DTE options, not at all. There's no reward. There's not a lot of reward unless you're selling them naked. Good luck. That's when people are jumping out of 30-story buildings. They get a margin call, man. Yeah. That's why, dude, when you buy premium intraday, it's great risk management, in my opinion. So if say I buy 3 contracts in SPY and I got them for like 20 cents a piece, dude, there's $60 on the line. Where if that ends in the money, it could be a 5x, 6x. Or if it gets in the money,
you win.
I like to see my puts or calls getting the money in the first 4-hour candle and snatching that premium before it starts to really degrade. Because in the afternoon session, dude, you can literally look at the calls and puts and just look at the premium just getting sucked out. It's crazy. It's crazy. That's why, especially if you get into any afternoon scalps, take the profit quick, right? Take the profit quick. Fill the small bucket. That's why for the early morning session, you can fill a big bucket, right? You can fill a big bucket. You get some nice moves. Yeah, this thing's cooking too, man. Let's go. Get your butt up there. Get your little butt up there. You need to close 15-minute candle above this first resistance level on the daily. And probably bulls proceeded right up, set up right at the top side of the 68.3 now. So the bears are like, fuck. So what can the bears do now? I mean, they can set up at this first resistance level. They can come up here. 4 hour first standard deviation. Second resistance level. More than likely, though, if this volatility continues, they're going to retreat right to the 1SD and try to kick this price action down. That's why I was saying, if you get the first 4 hour candle, right, 15-minute, right, if you get 15-minute candles at the end of the 4 hour closing up above here, that's when I'm looking for a run up here. Top side, at least. Top side of the resistance level. That's 423, almost 424. Yeah, barely even any premium at all. They're barely getting a bid, which is okay. That's what I'm not looking for. I'm not looking for lottery tickets. I learned that a long time ago. I used to be like, oh my God, look at these, man. These are pennies. Let's buy 5 or 10 of these. Dude, you got to get such a, that if it closes in the money, you're going to get paid. But most of the time, the problem is that the slow move, by the time you're getting up towards that, or down towards your put, or up towards your call, the premium's already gone. It could have a great move, but you missed the profit taking opportunity. That's why I like it in the morning session. Very rarely am I trading in the afternoon. When I do, it's usually I'm buying tomorrow's when I see something going on. But if I do scalp something in the afternoon session, it's quick, man. It's real quick. It's real quick. It's a no-brainer volatile move, right? And I'm probably going to up the contract a little bit. I'm probably going to buy a little more, right? Just to get that profit. But it gets dangerous. You got to limit your loss. Got to limit your loss. Wow, it's a beautiful day today, man. I don't know where everybody else is at, but it is a beauty. And we're about to wrap this up. Let me go back over here, make sure. Thanks a lot. Especially with the left. Yeah, Chris. No problem. Every day, man. That's what's great about us too here, right? We'll answer any questions. And actually, if you come into the Discord, dude, you can speak freely. Nobody's muted unless we get background noise or something, which happens sometimes. But yeah, you can come into the Discord, speak freely, answer questions, do whatever you'd like. And plus, we got a lot of info, a lot of information packed in this Discord. The link is right here on the TradingView stream. If you are watching this on TradingView, hit the rocket icon for us. Help us get out to more traders. Yeah, we got 4. Good. That'll work. Accept all. Sure, I'll accept them. Let's see here. Anything else I need to cover? No, I see Yasha popped in. Yasha was busy this morning.
I'm not here.
I'm not here. Sound like you're eating.
I'm just not here.
Gotcha.
Oh! Hello, this is ChatGPT.
Hello, ChatGPT.
Hello, ChatGPT. Sounds hotter every day. Can you put that voice in one of those Japanese robots? UPS it to me? I'm just kidding. That's where we're heading now. If you haven't noticed.
In the voice chat.
What's that?
I said, I think I see one in the voice chat.
Oh, yeah. Oh, yeah. For sure. For sure. All right, guys. So if you do have the indicators there, remember, or even if you don't, remember where the first standard deviation is. And hey, I mean, anybody out there, TradingView land, you can hit us up in the DMs, right? Say anytime during the day, you want to get some like distribution levels, like early in the day or something. Have no problem sending that information, right? We want people to have it, but we want people to learn too. We want people to learn this stuff because, guys, the liquidity that moves all these markets is coming from these high frequency trading firms, and they are very powerful entities. and they are trading volatility, entropy, probability, and statistics. We would love you to come aboard, ride those coattails with us. That's all we're doing. Trading the intraday volatility. We don't dare swing trade volatility. It's a no-no. We don't use leverage. If the leverage in the right hands is powerful, but I'm talking like 2x, man. 2x, maybe 3x. You get into 5x, stuff like that, you're looking for trouble. You are really, and it's just like you're raising your hand. Here I am. Don't think there's not algos running on all these exchanges looking for people using leverage and stuff, looking for groups of stop losses. Why do you think you get wicks? Why do you think you get those wicks that wick out people? Because the algo on that exchange finally, boom, sends that message. All right, look, we have this percentage up here of stop losses. Let's send that wick. And that's where you see the freaking Twitter bot begin. Hey, we have movement here from a cold wallet to a hot wallet. And I'm talking crypto. Dude, these are exchanges moving things around so they can freaking dump that market, pump the market, whatever they're going to do. It's crazy, man, the way this works. But it's true. It happens every day. People get caught up in it. So, yeah. The eagle. And we did just close that 15-minute candle on the top side of that first resistance level. Probably 4-hour 1SD. Going to make a move up here next. I'm looking for this 1SD on the daily, though. You get a tight range. You close some 15-minute candles above there, and then that 4-hour candle closes above that daily. Look for that. Look for the top side of the volatility range. 95.4 Laplace is right above it. So very low probability that the data set's going to close above like 424 area. Good stuff. Guys, we'll be back tomorrow morning, 9 a.m. Eastern Standard Time, as usual. Last trading day for traditional markets. I'm looking for crypto to have a big weekend, too. We might do a weekend stream. So, with all that being said, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you guys.